Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Here's the question that everybody's asking. Is the Bitcoin bottom in? We're sitting right over 58,000. Yes, the 58K gang has returned. And in my opinion, this is the most proof we have ever had that we live in a simulation. The 58K gang has risen from the ashes. They have emerged from this crater of the 2026 bear market, and they are defending the 58K level. They are defending it with utmost power, and it is beautiful to see. But the real question is the Bitcoin bottom in? Because according to lots of indicators, we are very oversold right now. So today we're not going to be reading any moon phases, okay? I'm not going to be doing any astrology for men or looking at unemployment revisions or looking at what the Federal Reserve says. I'm literally asking a very cold, calculated question today. We are going to look at this statistically across the full daily Bitcoin price history. How close is today to a major cyclical bottom? Because the actual data is very, very interesting. Bitcoin closed at $59,010 yesterday. We are 267 days removed from the October 2025 all-time high. It is down 52.7% from that high. We have spent 240 days below the 200-day moving average. So we are going to be looking at the statistical bull argument today, as well as the statistical bear argument, to give a fair accounting for both sides. Is the Bitcoin bottom in? Is it very close? This will be answered for you by the end of the video. If you guys could do me a favor, hit the like button and subscribe to the channel. That way you can support me spread the orange gospel of Bitcoin to the masses. Let's get into it. But before I do, I really want to take a brief moment to thank Horizon for sponsoring this video. If you guys didn't know, Horizon helps you take your trapped home equity to buy Bitcoin. No debt, no monthly payments, no income requirements, no term limits, zero risk of forced liquidation. If you want to take your trapped home equity to buy Bitcoin while it's this cheap, they can help you every single step of the way. It's super easy. Go to joinhorizon.com if you're interested. I will talk more about them at the end of the video. So what I actually did was loaded Bitcoin's price data for every single day in its history, and I went ahead and uploaded it to AI, and I asked it to make a composite bottom score with every single possible indicator that people use to judge whether Bitcoin is cheap or it's expensive. And the composite bottom score from this historical model that I created today is 82.8 out of 100. That is not some cartoonish we're so back number that's pulled out of a Telegram group chat. This score ranks 91st percentile in all of historical Bitcoin days. So when we are looking at all of these different indicators that we'll be talking about today, we are in the 91st percentile of it being cheap. If you wanted the inverse of this, it would be a 9 percentile as it relates to the long-term trend of all of these indicators. So basically, we are looking like we are cheap. I think everybody knows that as of now, but in terms of is the bottom in, we are now going to be digging into the numbers to see how specific we can actually get here. So the bull case from today, it's very simple. The market obviously very deeply compressed right now. The current deviation from the 200-week moving average is negative 5.5%. The deviation from the 4-year moving average is minus 3%, and Bitcoin has spent nearly 8 months below the 200-day moving average total. So this right here, this is not what we would call normal weakness when we look to Bitcoin's price history. This is that long, humiliating, statistical trench warfare that historically occurs near major opportunity zones. So step one of the bullish argument today is not that number goes up because we want it to. The bullish argument is that Bitcoin has already absorbed this long duration bear regime across price, time, momentum, and the trend deviation. It is statistically beaten down in several of the ways that have mattered most in all of the prior cycle bottoms in Bitcoin. And that is how bottoms usually feel. That's why sentiment is terrible. They don't feel like they're a victory parade. They feel like you're the last surviving employee at a Radio Shack in 2012. And at the same time, you're explaining to your fiance why the fundamentals have never been stronger. Now, the bear market rebuttal to this would be that the drawdown is not deep enough, because the bear case, it is also very real, I'm not gonna lie, but in my opinion, it is a question of who has the stronger case. To me, in my opinion, I think it's the bull case. We'll get into why, but we're going to give the steel man argument for the bear case here. we are going to do our best to actually side with the bears for the first time ever, probably on this channel. And their case begins with this one simple, brutal fact that this drawdown is still very shallow compared to Bitcoin's classic final cycle lows, okay? Compared to history, obviously, we need more of a deep, violent flush. But remember, on this channel, I have done a lot of analysis in terms of Bitcoin's compressing volatility. Bitcoin is sitting at a historically low volatility. And when Bitcoin's volatility is roughly half of what it was in 2022, and we know that the market cap of Bitcoin is roughly 4 times the size, that means you need 4 times the volume to do the same percentage move. And because Bitcoin is so much less volatile, I don't think that those moves, those prior 80%, 90% drawdowns like we have seen in the past, those are equally as likely. And that's the problem with the bear case. People treat 40K Bitcoin as some foregone conclusion, but they're not realizing the statistical likelihood of that happening is dramatically lower when it's coupled with Bitcoin's decreased volatility. And right now, when we see Bitcoin down roughly 53% from the top, that's painful. That is a real bear market by any considerable standard. If we look to history, 2011, the asset was down 91%, 2015, down 87%, 2022, down about 75%, 2018 was down 82%. So all of those prior bear market regimes, they were considerably worse than this bear market in terms of a percentage drawdown basis. So if you are starting to build the bear case from here, this to me is your strongest point. This is by far the best point because 53% compared to 80%, 75% even, like we have seen historically, there does seem to be some room to drop if we do want to see a historical analog there. But today's drawdown still resembles the 2021 mid-cycle flush a lot more than the full cycle death pits of 2015, 2018, or 2022. This does not mean that the bottom cannot be in, but it means the final bottom evidence is incomplete. So the bears say, yes, Bitcoin is statistically compressed, but Bitcoin's historic final lows, they often involve deeper price destruction. They're not wrong. In my opinion, they're just forgetting how much more work it takes from the markets to get it there. We're seeing compressed upside during the last bull market, and a lot of people think, hey, we're just going to see the equal downside compared to last bear market. So I don't understand that line of thinking in the slightest. Now, I actually calculated the power law residual today. So let's look at the bull case from here. In my opinion, this is bullish. A lot of people might think it's bearish because a lot of people are going around saying the power law is broken, which is not true. Using Giovanni's Bitcoin power law framework, Bitcoin is currently 64.9% below the model's center trend line. The power law residual, as of the snapshot today, when I calculated it at $58,200. That residual is in the 0.07th percentile of every single daily Bitcoin price. So let me translate that into English for you. That means only 3 days in all of Bitcoin's price history, we have seen a lower power law residual than today. That's correct. 3 days ever. That is not kind of cheap or slightly below trend. That is Bitcoin lying face down in the long-term trend model's parking lot while the security guard pretends not to see it. And this is why the bull case is actually more sophisticated than, in my opinion, the drawdown argument. If you look at the all-time high drawdown and you say, well, 52.7%, that's not enough. Fine. But if you look at Bitcoin relative to its long-term power law trend, the market is extraordinarily depressed. And that tells you something important. The current bear market is not historically extreme by the raw percentage drawdown, but it is historically extreme by the trend residual. And that means that Bitcoin doesn't need to be down 80% from the high to be deeply cheap versus its own long-term growth curve, especially if the long-term curve has continued rising while price has bled sideways and downward for months now. So this is the hidden structure behind Bitcoin that a lot of people miss. People keep staring at the all-time high and they're saying, it's only fallen 52%. It needs to go to 70 or 80. But if you look at the price relative to Bitcoin's long-term adoption trend, today is almost unprecedented. Bitcoin has rarely ever been this cheap compared to that trend line. When only 3 days in Bitcoin's price history were cheaper versus the power law trend, you are no longer in a normal bear market condition. You are in the part of the movie where the protagonist is crawling through broken glass and the audience knows that either this is the end of Act 2 or the beginning of a felony. So now let's talk a little bit more about Bitcoin's compressing volatility over time. The current 90-day realized volatility is actually only 36.7% annualized. Historically, that is very low. That's around the 6.6th percentile. And remember, I was just talking about low volatility kind of signaling something bullish. The market is quiet, the tourists are gone, the casino carpet has been vacuumed. The guy who mortgaged his pancreas to buy the top has stopped making YouTube videos from his car. But prior Bitcoin final lows, they usually came with a lot higher volatility than this. This is just reality when you look at the data. In 2011, the 90-day realized volatility was 169%. Then it went down to 95% in 2015. 2018 was around 65%. And in around 2022, the same 65%. Today is 36.7%. Remember what I told you, roughly half the volatility of those prior bear regimes. Now, to me, this is bullish because obviously I was just telling you that, hey, the Bitcoin network, it has 4x the amount of capital that it did 4 years ago. So in order to make those price moves like we've seen in prior bear markets, you need to move a lot more capital. So the bullish read is that this low volatility bear market can mean seller exhaustion. To me, that's the most obvious read. But if you want to take the bear steelman case, a lot of these people will say, hey, there might be a lot of leverage in the system. The structure hasn't had its final stress test yet. They're saying that if this is the final bottom, it's a very unusual one, which I would actually agree with. It is quiet and compressed in its grim, but it's not explosive where we have seen the volatility skyrocket in accordance with a massive Bitcoin final leg down. So right now, to be fair to a lot of the bears, what they're saying is that Bitcoin, yes, it's relatively cheap. It doesn't seem like it's expensive, but the cleansing event may still be incomplete. And if we do have one more cleansing event and we go even further below the relation to the power law trend line, that would be statistically significant. Now, this is what I always gravitate toward because I have a low time preference as a Bitcoiner. I'm always looking at years into the future. And when I actually map all of these different analogs in the price data and I look at the forward returns from this level of oversold, I can't be anything but bullish. Coin is currently 21.7% below its 200-day moving average, 35% below the 365-day moving average, 32.5% below the 2-year moving average, 5.5% below the 200-week proxy, and like I said earlier, 3% below the 4-year moving average. So these are all bottom zone numbers. The 365-day moving average right here, this is in the 11.4th percentile. The 2-year moving average deviation, this right here is actually in the 12th percentile. The 200-week deviation is in the 5.5th percentile. The 4-year moving average also in the 5.4th percentile range. And what I'm not saying is we take Bitcoin's price, we smooth out the volatility, look at those long averages, and then we say the orange line crossed the blue line, therefore the elves have blessed Q3. That's not what I'm saying. I'm literally looking at the data and I'm asking historically, where is Bitcoin relative to its long duration cost and trend baselines? And the answer is Bitcoin is deeply depressed right now from all of these averages. So according to the median 365-day return from here, that's plus 71%. The median 530-day average return is a plus 122%. So not taking the averages that might obfuscate the huge outliers, if we just look at the middle numbers in terms of the median returns, they are quite bullish from here. Now, that does not mean that we have officially bottomed. It just seems like most of the juice has been squeezed from this bear market already. That's why I'm not thinking twice about continuing to accumulate Bitcoin in this price range. Now, I also calculated a monster Bitcoin bottom signal when we look at the percent of the supply that is in profit. Right now, as of filming of this video, Bitcoin has about 45.6% of the supply in in profit right now, and this level pretty much always marks the exact bottom. We went a little lower in 2018. We hit around the same level in that flash crash during COVID, and then in 2022, we hit around the exact same level that we are today. So about 45.5% of Bitcoin's supply being in profit. The last time we were at this level was in November of 2022, November 13th to be precise. Now from that date, Bitcoin went from $16,324 to a 1.33x in 3 months, 1.64x in 6 months, 1.79x in 9 months, 2.2x in 12 months, 3.8x in 18 months, and 5.5x in 24 months. Historically, whenever we have seen this much supply in profit, only 45% of all Bitcoin, that level of the supply being in the green, this is always marking the bottom. Now, I'm not saying that we are going to see those same multiples of returns, but if history rhymes and we did, I would absolutely love it. And personally, I would be fine with returns not even this good. So if we wanted to calculate those same multiples on top of Bitcoin's 58K price today, in 3 months, we'd have 78K Bitcoin, 6 months, 96K, 9 months back over the 6-figure Bitcoin price, 12 months is 131K Bitcoin, 18 months, 226K, and then 24 months would be a 324K Bitcoin price. So to me, that is absurdly bullish. So 24 months from today is about 318K Bitcoin in terms of the power law trend. So we actually wouldn't even hit a bull market by historical standards when looking at Bitcoin's power law trend line. We would just be getting back to a reversion to the trend. So who knows, maybe the actual multiples that we see, we go a standard deviation above the power law, and maybe we're looking at 400K Bitcoin within 2 years from now. Not saying that's guaranteed, I'm just saying that we wouldn't need too much of a crazy bull market by historical standards to actually get there. And that's simply because, remember, the power law is actually in logarithmic time when you're looking at this x-axis here. And the last time we saw a decent deviation above the power law was at the beginning of 2022. It has been quite a long time since we have poked our heads above that long-term trend line. So one more steel manning of the bear case that I want to talk about today, we need to look at the historical analogs that I was analyzing today. So what I did was I actually factored in a lot of different things to look at the 25 closest historical days to today. I selected them across many normalized variables: the drawdown, the time since the all-time high, moving average deviations, the deviation from the power law, volatility, momentum, Sharpe ratio, Sortino, skew, acceleration, lots of things. So I wasn't doing a one single indicator comparison. I was doing a multi-dimensional similarity search, and the results were bullish overall, but they were not exactly clean. And what I mean is that a lot of the closest historical analogs for today were near the real bottoms, but others were actual traps, and I'm talking absolute murder holes. For example, June 3rd, 2022, the worst forward drawdown over the next 530 days was negative 46.9%. April 30th, 2022, the worst forward drawdown was negative 58.1%. October 30th in 2018, negative 49%. September 21st, 2014, worst forward drawdown was negative 58.9%. So obviously, this would be the bear case in one paragraph here. Bitcoin can look statistically cheap like it does today, using lots of indicators. The trend is compressed, momentum is totally exhausted, historically ugly, but we could have one final trap door waiting under the rug like a cartoon villain with a margin account. And this is why I want to differentiate a bottom zone and a final bottom. They're not the same thing. A final bottom can last months. It can include violent rallies, brutal retests, and one final collapse that psychologically waterboards anyone still trying to be rational. The market just loves to create a setup where the data says that value is emerging and then immediately punishes the early buyers so badly that they begin reading gold bug newsletters from Peter Schiff and they Google farmland prices in Nebraska. So I don't want to be religious about any one particular model. I just want to say the forward asymmetry seems attractive here, but similar historical conditions sometimes preceded another big drawdown. So when I look at all the data, it doesn't scream that the exact bottom is definitely in. It does say something more useful though. Bitcoin is statistically deep in a bottom zone, the trend compression is extreme, and historically similar conditions usually produced very favorable forward asymmetry. So that is the real conclusion about why I am still super bullish on Bitcoin, because if you've made it this far, good heavens, just look at what has happened throughout history over the next forward 3, 6, 9, 12, 15, 18, 21, 24 months. It's not time to take a victory lap. There is definitely no euphoria in the market today. This is statistical compression. Bitcoin right now is standing in the wreckage of the bear market. It's covered in ash, surrounded by dead narratives, while the long-term trend models continue to whisper. This is where the math really starts to get interesting for the long-term Bitcoin bulls. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you like this video. Please like it and subscribe to the channel. That way you can support me spread the orange gospel of Bitcoin to the masses. Have a very terrific day, everybody. Do not party too hard. Class dismissed.
We all want to own more Bitcoin, but most of us aren't sitting on piles of idle cash, and that is where Horizon comes in. Horizon lets homeowners convert a portion of their home equity into Bitcoin so they can diversify into an asset with stronger long-term growth potential. What makes Horizon stand out is its flexibility. There are no monthly payments, no interest charges, and no fixed term limit. You stay in your home, you stay in control, and the coin that you buy is fully yours to hold in custody however you choose. That means no margin calls, no forced selling, and no scenario where Bitcoin volatility puts your home at risk. If you believe that Bitcoin will outperform your home's growth over the long term, Horizon gives you a way to act on it using capital that you already have. Horizon has already helped hundreds of homeowners put their equity to work in Bitcoin, and they'd love to help you as well. Visit joinhorizon.com using this QR code or at the link in the video description. You can see how it works and estimate how much Bitcoin you could unlock in just 90 seconds. Transform your home equity into Bitcoin today with Horizon.